channel, stocks and books by Bree, where we talk about buying stocks and dividends dividing and supplemental learning. Want the secret? Gotta read. Here we go over the fundamentals you need to succeed. Major keys, you might get some gems, economic gems. So be sure to go hit subscribe so you can stay linked in.
Hey, what's up, family? My name is Brehon and I'd like to welcome you guys back to the channel where we love talking about our financial and personal development. Listen, family, I hope you guys are having a phenomenal week, and I hope all of your trades are successful. Now, family, I recently closed out on a call option for AMC. And so I had this call option out there with a September 17th, 2021 expiration date, $40 call. And I hit a high of, I think it was around maybe like $1,200. So it came back down a little bit, and I decided to cash out and take my profits. Okay, decided cash out, take profits, and you know, ultimately, when success comes down to understanding and mastering just a few strategies. There are hundreds of strategies, and if you try to learn them all, you just end up being confused. All right, you end up really being confused. And so here, what I love is I love understanding candlesticks, candlestick development, and I also do a lot of trading based around that 20-day simple moving average. All right. Now let's pull up the AMC chart here. And so when it comes to, the 20-day moving average, stocks never move too far away from that 20-day moving average. If they do move far away, they're going to snap back like a rubber band. All right. So when we take a look at AMC, we crossed over the 20-day moving average back in what was this, May 19th, or matter of fact, May 13th. And we've been cruising along that 20-day moving average ever since then. We fell below the 20-day moving average. We came back to the 20-day moving average here, was met with some resistance. We came back down. We stayed below the 20-day moving average. We tried to cross over here, but came back down. We hit the 20-day moving average again. We actually crossed over the 20-day moving average. We had a day above the 20-day moving average, but we came back down to that 20-day moving average again. So here you can see the 20-day moving average has been a resistance point for AMC. All right. But on August 23rd, we crossed over that 20-day moving average. And so I decided to jump in on August 23rd. So I jumped in, placed a trade. And what I did was, when I placed this trade, I immediately set a stop limit because I want to greatly minimize any potential loss. All right. And so I put the order in here because we crossed over the 20-day moving average, and I was hoping for more momentum up above this 20-day moving average. Okay. And it's just that simple. We cross over the 20-day moving average. I buy. I set a stop limit. If we fall below the 20-day moving average, I'm out. Minimize my losses, and I fight, or I wait to fight another day. All right, based on this simple setup. All right, and so we went above that 20-day moving average, closed above the 20-day moving average, and the next day, boom, we had a nice run up. Nice run up. Right, and so I've been sitting here waiting. We came back a little bit, but it was at 47.13, so I decided to cash out, take my profits, and continue monitoring AMC because it appears that we did have some resistance. It seems like we have resistance around a $48 mark. So we hit it. We came back down. We went back up a little bit to 47, and now it looks like we're tapering off back to the 20-day moving average of 37.92. Now, as we continue to stay above that $40 mark, that 20-day moving average may come up or may meet up at the $40 mark at some time in the future. But again, this is one of the strategies I've been using for a long time. And I learned this from a multimillionaire. And so there's a guy, he's a multimillionaire. He day trades, and I pretty much use this strategy on daily candles because I'm away from my computer, and so I don't have the time that I used to have to day trade. And so what I do is I place my setups and I place my call options based on daily candles, all right? Based on daily candles. Now, there may be opportunities where you can actually place some trades, intraday trades, using the 2 minute time frame. And so if you take a look at here, there has been awesome opportunities for us to jump in. And so we crossed over the 20-day moving average here at 10 o'clock. So if you would have jumped in, you would have had a nice run up. All right. And then we have these candles. And so if you're familiar with these doji candles, you know that at the top of a trend, once we have a doji candle, there is a signal of a reversal in pattern. And so we had that. So we had the reversal of pattern, and we had strong downward movement. And what happened? We crossed over the 20-day moving average again, the 20 period moving average again, and we had a nice run up. And so you can play that on the 2 minute chart. But again, I'm away from my desk. I'm away from my computer, so I don't have an opportunity to sit down and watch these charts move in a 2 minute time frame. But what I do like to do is I like to look at the daily chart. And I like to watch the end of the day, the end of the closing session. And so if I see, we're moving above this at the end of the trading session, this may give me an opportunity to say, hey, I want to jump back in. All right, so we jump in here. We're going to place our stop limits, greatly minimize or reduce our possibility for loss. All right, and boom, I had a great day up, and we've been trading sideways. And now I'm sitting on the sideline. I'm out. I took my profits, and now I'm waiting for another setup. All right, and so I won't be jumping back into AMC anytime soon until I see a crossover coming down and a crossover going up. And so I'm done with AMC. Hopefully you guys could, if you have the opportunity to sit there and watch it, you could pull up the 2 minute chart, the 5 minute chart, and you can wait for that crossover, cross above that 20-day moving average. You can jump in, take some profits, sell, wait for a pullback, and we wait for future trades. All right. And that's about it. That's about it. That's the simplest way of trading is by using the 20-day moving average. And if you begin to study these charts, look at these charts every single day, you will begin to pick up these patterns. And if you could pick up these patterns, you could put yourself in a position where you could win over and over again. All right. Now, that's all I have for you guys today. Again, remember, keep reading these charts, studying these charts, develop your entry plans, develop your exit strategies. And I hope you guys are winning. And remember, hit the like, hit the subscribe, and keep coming back for more wealth building information. Peace.